Hello everyone, welcome to Smart Investing. Today's video is going to be about the Wall Street stocks. So this is selection number 5. So for the last stock, we have ticker symbol J. So that is actually the shortest ticker symbol I've seen. It's actually pretty rare to see a ticker symbol with one letter. So we're just going to jump right into this. We're going to go over fundamentals, technicals, and what will be the best strategy using this stock based on the quants. So first things first, I'm going to look at my first page. So markets are open. It is, let's see, February 9th, Thursday. I'm on the East Coast and markets are open. And we have here the share price at $121.62. Company is actually called Jacobs Engineering Group. So with this stock, we can easily see here that the volume, it's not insanely high and it's not insanely low. So it has some good movement on it, I would say, pretty average. Nothing really eye-popping, nothing really, that screams volatility. So just comparing the last 3 months to the current volume today, and again, that can differ from any given day. So again, nowhere near its 3-month average, but still pretty active is what I'm trying to get at. So moving on from that, we have a market cap of 15.4 billion, 52-week high and low of 150 high and 106 low. Definitely some good price range for the year. So that would give a difference of about 45 bucks. And we have, well, actually 44 bucks to be a little more accurate. But it's still above normal ranges, so from what I've seen. So PE ratio here is at 24.21. Forward PE is at 16. Dividend is only $1 in change. Dividend yield is not even 1%. So with the dividend alone and the income, I'm not really in favor of it. I've seen better numbers than that. As for the PE, it seems like it's growing slightly. I mean, it's really overvalued. So what I'm trying to say is it's expensive, in other words. And we have forward PE of 16. That would seem a little bit more normal. I'd like to see it drop a little bit more than that. Even if it's at 16 or between 15 and 16, just to get a feel of how they can do with, I guess slightly lower earnings. And I want to see if the price can still keep up with the company, even though they might earn slightly less. So earnings per share is at 5. It's actually pretty good for a company in general. I haven't seen a lot of companies that can gain, especially for that market cap, that can gain, 5 dollars of earnings per share for the year, and considering again them as a mid cap company. Now we have here the technicals here. So apparently they pay Dividends, let's see. The last time they paid a dividend was in September. Uh, I would assume every 3 months. So as we can see here, I would think the next date would be somewhere in late December. We'll look at the history for this. Doesn't seem like they continued a dividend payment. Uh, 4 times out of the year. So we have here in February, May. Usually they're 3 months apart, but this doesn't seem like it. This was a little bit off. This was a little bit off. So I would have expected this. So May, June, July, August. This should have been in August instead of July. And then instead of September, should have been November. Sorry for my handwriting. But it doesn't seem that way. So going back in history, now let's just look at that. Let's see in 2020. It's just confusing because like I said, all those numbers are throwing it off. Obviously they pay 4 times a year. They're just paying at random times. I'm really just focused on the dates, really, to get a consistency of when they pay. Even if it's the same month, that's still fine. But if the months are off, it throws everything out of whack. You see, in 2020 they paid in January, and then May and July, then October. Then the next year after that was in February, May, then July, October. Next one up was February, May, July, September. So I guess the next one would be in late February. And by the looks of it, at least 23 cents. So again, I'm not in favor of using the strategy for this stock for income. Again, I said it before, I think you can find better income stocks that are out there. But anyways, that's just basic fundamentals and basic technicals. Now we want to actually look at the chart, get into some advanced technicals here. So last 5 years, looks like they gained from $100 from the high of 2020. I like to go off of 2020 because obviously that was a drastic change, and then from there things just kind of took off really for no reason, using technicals. And then obviously in 2022 things were down, and so far in January things starting to go flat, or I guess up in January. We were up in January for the most part. But again, this is just the beginning of the year. Anything can happen, because on the stock market, everything looks fine, but in the real economy, it's just totally different. And obviously, people take things into consideration aside from companies, and they look at rules and regulations from the Fed as well, and government policies and all that, and that can play a drastic change as well into the market. So people really need to understand that there's like two economies going on. There's like the real economy and like the fixed one, which is the one that the Fed controls. So there's just no way around that. But who knows what this year will bring. We're just getting started. So 5-year range we have here, it bounced off that 5-year. So that would have been a good buying opportunity. Again, getting close to a nice buying opportunity if you're interested in this stock. Again, I can't mention prices or ranges, but you can clearly see off the 5-year The reason I'm using the 5 years because, again, I said it before, ever since 2020, uh, it's been super greedy. And there's just really not much of a reason from 2020 to jump up this high. And now this looks a little bit more normal with this consolidation phase. And I think there is such a thing as being overly bullish. So anyhow, uh, it is close to the EMA 100. So I mean, between those ranges, between the EMA 100 and the EMA 200, I can't really say if that's a good buying opportunity because the 50 EMA is catching up to it. So it just needs further confirmation. Obviously, it's above its 200 EMA for the 5 year, but we can look at the 1 year. And so far, for the 1 year, it is under its 200-day moving average, slightly right there at $123, rounded up to 124. So it's still considered in the downtrend, and the low for the year is actually at close to 109. You can render a little bit less to 108 if you want to be accurate. So if you wanted to be getting into this stock, I'd say, let me see. So from this line from 123 to the low of 108, I do the average between those two. So basically you add 108 and 124 and then divided by 2, whatever the number that is. That would actually be a decent move as to start watching it into what kind of situation you want to get into when it comes to this stock. If you just want to day trade or if you're looking at this long term, I wouldn't look at this stock long term. That's just me. And if you look here, it looks like they recently reported earnings. So overall, for this stock, it seems pretty flat. It still needs further confirmation for a trend. So again, it looks like it's flat here between that. And if it drops under, I'd say at least, if it drops at least under 117, that's a nice opportunity to jump in. If it were me looking into the stock to buy it. So again, with this stock, I don't like it for the short term or long term so far from what I'm seeing. So we have here the main reason why this stock is so popular. It has a bunch of analysts, and it actually, at one point when I first saw it, it had a 100% buy rating, but now it only has a 94% rating, which is still pretty high for the buy rating. And then I don't even look at these price estimates. They're just like guesstimates. They always stay the same, really. That's not an accurate reading. And again, for this stock, we have here overall rating for the quant is 4 out of 5. Income, I wouldn't use it as income. Value, I think it's overvalued. I don't think this is a value stock. But I think quality is actually more important than the value. And then we have here just basically momentum and growth. Momentum, let me look at the chart for a little bit, order distribution flow. So last 5 days, some strong orders. And then going into the start of February, then we have here some inflow and outflow is what I'm looking at. So we have here overall, it's about the same, slightly more outflow as we can see here. So we see that number at 4.36 versus 3.59. I'm assuming for the last 5 days. And then cost distribution seems pretty even a little bit, but we have these big jumps here. Those cells. Now we have here, again, coming back to the quant rating. So for the last week, it looks like it was slightly more on the sell side instead of buy. And the quant rating for this one, I don't get it. It rated a 4 out of 5. So it may have some growth to it and momentum. So now we just want to look at more data here. But first we want to see what this company is real quick. So they provide a range of engineering, design, and architectural services, construction and construction management. So obviously, what kind of engineering I would like to see? Just construction, I guess. And still a good business to get into, but I want to see if they have any addition to that. Okay, so they offer solutions for clients such as climate change, energy transition, connected mobility, and it says smart cities here. So they have consultancy from financial services, government, and transport. So the government is always a huge buyer in anything when you have them as a client. Employees are 60,000. It says founded in 2022. I highly doubt that. I'm sure they've been around longer than that, but probably they just became a public company last year. We want to click on this real quick, construction and engineering. And I just want to see how many competitors they have and the pricing, more or less pricing. So we have a total of about 44 competitors. And if there's anything, let's see, what's their price at 121? So I'd say at least $100. So we're looking at companies that are at least over $100. So we have 1, 2, 3, including them is 3, but 4. So 5, 6, 7, and that's about it. 8, and that's it. So 8 companies that are at least worth $100. I just want to see market caps real quick. So they're a $2.4 billion company. So this is a smaller company, yet around the same price range. Next one up, we have EME, 6.9, so a little bit smaller. And price is, see, smaller companies and still about the same price. I'm pretty shocked actually. So this sector is definitely interesting. needs to be looked at. So hopefully I get into it. So yeah, compared to the pricing and the actual market cap, just alone just with that seems a little pricey. But again, sometimes you might pay much more because of quality. So with this company, you want to see what kind of earnings they have. So we'll look at the, let me close it up and open it again so I can get some financial information. I'm going to close this up with the financials. So we have here return on assets. So I finally have some 2022 numbers for some companies. That's good. So ROA is at 4.4% for 2022. And then that's their standard pretty much. They did better in 2022 than the last 2 years. But out of the 5 years, pretty normal. 2022, they had 9% for return on equity, better than the last 2 years. And then for their earnings, still did pretty decent, which was really a 5, but here they ranked it a 4.97. I guess you could round it off to a 5. Net margins were 4.32%, better than the last 2 years previously. And then their debt stayed about the same at 54%. Now, moving to the net income. Net income grew close to 70%. Well, if we compare these numbers, grew 70% for that year. Comparing to last year, though, it grew 61%. Now, for the revenue, assuming it grew a little bit more, so slightly, looks like they did some cost-cutting measures by a lot. I mean, I wouldn't say it's double, but that's a really big bar to fill in compared to last year. So top line and bottom line. So now looking at the balance sheet, it seems okay. I want to see the cash flow. So operating cash flow, just an overall view. So we have, let's say 540. So they definitely have a lot of cash flow. They can definitely afford the dividend, and they can definitely afford a raise if they have like over 300 million in cash flow. I don't know the exact number, but I just don't feel like doing the math in my head. But they have strong cash flow for the dividends. Now, just want to compare the list again. Let me look at the bottom. So in 2017, 15 cents, and then in 2018, they paid 15 cents. The dividend growth is pretty awful, but it looks stable. They had 2 splits, one in 2002, one in 2007. For this company, we have institutions are involved as shareholders, which is good. Then we have insiders and other people, so it's less than 8% each. So institutions are the ones that run this company. Now, aside from all this information, so net income has grown a lot. That stands out to me a lot. I think, honestly, it's just too expensive uh, for this stock. Like I said, you can see other companies that are a little bit cheaper. So again, it's a decent company. It's pretty decent. But if their market cap was less, I think this company would be worth it. And I'd like to actually see PE ratio drop a little bit, just because it's overvalued. And then as we can see here, there are other engineering companies that have less market cap that are priced even slightly higher than this one. But I assume this company, Jacobs Engineering, they have better money management skills. So as for right now, would I add this to the watch list, or would I wait it out, or would I say no? I think I would want to wait it out. And I'm not saying yes or no, so I'm still leaving this on the list as maybe. And we will have to come back to it compared to other companies. They're pretty expensive compared to their peers, but again, they might be outpacing their peers. So that's what it seems like. That's the information that I gathered. So right now, you just gotta hold off. So that's my take on it. Uh, that's all I got for you guys. So that's pretty much it. So thank you guys for watching. Stay tuned. I have plenty of videos coming. So I still have the banking sector to go. I still haven't done that in like a month. Special dividends, that one's coming out tomorrow. I'm gonna work on that one tonight. So I have the shorts as well. I have to do the short video for this one and the special dividends, which is coming out tomorrow. So thank you guys for watching. Like, comment, or subscribe. Anything would help. Stay tuned. Again, thank you guys for watching, and I'll catch you guys soon.